world's biggest retailer by volume and profit, that would be Walmart, warned today that it may have to start raising prices later this month due to President Trump's tariff policy.
The first blow came with little warning. A sweeping wave of tariffs struck the U.S. retail system, setting off a chain reaction that caught even the biggest players off guard. Walmart, long known for its promise of affordable prices, was the first to make a stunning move. Instead of absorbing the added costs, the company shifted parts of its supply chain out of the American market, signaling that cheap goods could no longer be guaranteed. Prices climbed almost overnight, stretching household budgets already strained by inflation. The company cautioned shoppers not to panic, but the warning itself fueled a growing sense of unease. Soon after, another crack appeared in the foundation of American retail. Target, a brand built on stability and trust, now found itself caught in the same storm. If the largest retailers were being pushed to the brink, what would this mean for the rest of the country? Let's find out. It began with an ordinary trip to the store that no longer felt ordinary. Shoppers who had grown used to stable prices were stunned to see sharp increases overnight. A pack of beef that once cost $9 now demanded nearly $14. Lettuce had climbed by 30%. Breakfast cereal, a daily staple, cost $2 more. The sense of security tied to grocery shelves across America had vanished. What happened inside the United States quickly spilled far beyond its borders. A chain reaction had been triggered by tariffs, and the shock was felt in Asia, Africa, and Europe. Shipments of rice, cooking oil, and canned goods were halted. Shelves in Southeast Asia that once carried American imports were stripped bare. In Nairobi and Manila, food prices surged, and families already living on tight budgets were forced into even harsher struggles. The spark that set off this storm came from the White House. When President Trump lashed out at Walmart, accusing it of betraying American workers, the fallout extended far beyond American households. Walmart had been forced to let go of its famous slogan of everyday low prices. The math no longer worked. Tariffs had erased the possibility of maintaining them, and the company's balance sheet bore the scars. By the second quarter of 2025, losses reached an estimated $25 billion. Those higher costs landed directly on the shoulders of families trying to afford food and basic goods. By June, Walmart's crisis deepened. 10 major distribution centers were temporarily closed, and over 50,000 employees found themselves on uncertain ground. The company's just-in-time delivery system, once celebrated for keeping shelves constantly stocked, now struggled to survive. Executives pointed their finger squarely at the tariffs, describing them as economic weapons dropped directly onto supply chains. What had started as a political move quickly turned into a retail nightmare. The effects reached Wall Street within days. Investors saw prices at Walmart climb, distribution centers close, and panic spread across the financial sector. Fears grew that this disruption would not stop with groceries. Electronics companies, clothing chains, and toy manufacturers all depended on Walmart's enormous purchasing power to keep costs manageable. Now, those contracts were unraveling. Logistics costs spun out of control, brokers revised agreements week by week, and an entire global trade system slipped into territory no one had navigated before. Analysts warned that if Washington did not act, the United States risked the largest retail collapse in modern history, timed disastrously with the approach of the holiday shopping season. The roots of the crisis went back to April 2, 2025. On that day in the White House Rose Garden, Trump signed Executive Order 14,257, known as the Liberation Day tariffs. The move was designed to put pressure on China, but it quickly tore through the global retail system. Walmart's retreat from parts of the American market was only the beginning. Target, Costco, and Home Depot soon followed. Seeking out contracts with manufacturers in Vietnam and India, this marked the most dramatic restructuring of global supply chains in decades. Tariffs intended to weaken Beijing's role in trade instead accelerated its replacement, and it was American shoppers who paid the price. Within days, the impact was undeniable. By April 5th, Nearly all imports into the United States carried a baseline 10% tariff, except for goods arriving from Canada and Mexico. On April 9th, retaliatory tariffs hit 60 countries, with China punished the most. Rates on Chinese exports soared as high as 145%. The ripple was swift. One of Walmart's largest toy suppliers in China slashed production by 70%. The U.S. Toy Association issued an emergency warning, reporting that nearly half of its members were facing bankruptcy. Shipping costs tripled on routes between Shenzhen and Long Beach, and delays piled up. Europe soon felt the weight of the tariffs as well. Empty shelves appeared before goods even reached supermarkets. At major U.S. ports, hundreds of containers sat abandoned, importers unable to pay the new duties. Some cargo spoiled as it sat stranded. Walmart's warehouses turned into graveyards of unclaimed shipments. The critical holiday season that normally boosted the economy now carried the risk of empty shelves nationwide. On May 2nd, the situation escalated further. Trump threatened a 50% tariff on European imports unless the European Union bowed to his terms. Markets across Europe lost $180 billion in value in 3 days. German auto exports slowed to a crawl, and stock indexes dropped sharply. Asia, too, was thrown into